Thanks so much for tuning into today's Talking Point. I'm looking forward to this conversation today with our guest, Cameron Brandt, because I reckon the pulse that he would have on flows and the reasons for the flows, if there are diversions from the recent past, is probably unmatched. Cameron, great having you. Thanks for taking the time out.
Not at all.
And very good evening to you, Cameron. Thanks, for staying up so late for us. Cameron, a quick starting off. What's the recency bias around flows? Has there been a recent change from the template that would have been existing for the last 3 to 6 months?
We are starting to see geopolitics intrude a little bit, but honestly, so far this year, if I had to rank the drivers, they would be interest rates, yield, and where energy prices have headed. The impact that that's having on fund flows has evolved over the past, certainly sort of 3 to 4 months. One of the big things we've seen is a steady retreat from diversified global exposure, which is slightly unusual given that that's supposed to be one of the standard playbooks for uncertain periods. And especially on the equity side, a very strong pivot to a number of major Asian markets. So Japan, China, India, and Taiwan equity funds have all been enjoying lengthy periods of above average flows, with Korea equity funds there or thereabouts.
Got it. So I heard you say that the major pivots in the order of ranking are interest yields and interest rates, and geopolitics has just started to intrude in. Or just wondering if you can elaborate a little bit on that.
I can. The past week, we saw the first positive flows into gold funds in over 4 months. So that I think is definitely a marker. And we are, starting to see, some shifts in the preferred sector fund groups, which I think are sort of a little more indicative of some of the geopolitical risks, and some of those offer opportunities. But we're seeing accelerating flows into energy funds, and they're chasing the old energy story rather than the new clean energy one.
That's interesting. And when you say that we're starting to see some inflows into gold funds, are these meaningful in nature, or is this just a small trickle?
It was meaningful. It was more than a small trickle that was leaving these funds week in, week out. It was over 500 million last week, which is starting to be meaningful on a weekly basis. And it was an abrupt departure from the pattern we've been seeing. And when I poked around, definitely geopolitics and the uncertainty that the new tensions in the Middle East have injected were frequently cited as the sort of one of the drivers for that.
Got it. Cameron, the other aspect is most people were of the belief that if China starts showing a stimulus, then we might well see a shift in flows away from a clutch of emerging markets, maybe even including India, Indonesia, and some of the others, towards China. Now, we've seen some signs of a stimulus, though some people say it's a water pistol in the case instead of a bazooka. Just trying to understand, have you noticed some pattern of flows ever since China started making noises?
So the answer there is that China funds have already received large amounts of money on the assumption that that's going to happen at some point. So even when the narrative about China got, I think, unnecessarily pessimistic earlier this year, we were still seeing pretty hefty inflows week in, week out to China funds. Now, some of this was domestic money, which, as you can imagine, doesn't have a lot of attractive options at the moment. You don't want to buy more real estate. A lot of the bond market is dedicated to real estate. Wealth management products, I think, maybe next in the firing line. Commercial bank deposits are again being sort of slightly sort of suppressed to support lending to the state-owned enterprise sector. So I think it would have to be a really enormous amount of stimulus to really move the needle at this point. Quite a bit has been invested in the assumption that at a certain point the Chinese government will shift to a more aggressive pattern than we've seen so far. I'm not sure how good of a bet that is. They've held their nerve pretty well, and given that they set themselves a pretty achievable target at 5% and look like they'll manage that. I think it would be unwise to project too much onto them at this point.
Got it. From the data that I'm seeing and the data that we've collated, from about sometime around March, and we all know the pivot point per se for flows into countries like India and India in particular, until August end, the flows were positive. They turned negative starting September. I'm just trying to understand, to your mind, because you see idiosyncratic flows into certain Asian and emerging market economies, including India, I presume, that change, does it coincide with something particular like the China move or something else, or is it a part of what's happening to the larger EM basket because of geopolitics?
I think it's a little more technical, which is, as I mentioned, there has been a growing sense that it's almost too hard to get a good handle on the global picture. So narrow the focus to areas that you have some familiarity with. So we're seeing global emerging markets funds take fairly consistent and fairly large outflows now. I've seen that for nearly 3 months now. On average, they allocate somewhere around 8 to 10% of their portfolio to India. So that is foreign money, foreign funds that are having to sell to meet redemptions. So at the moment, there's sort of a yin yang. The diversified funds of necessity are having to sell India. The dedicated funds are still taking in money. Where's the balance? And obviously, there are other sources of foreign flows that we don't capture in the outside the mutual fund ETF universes.
Got it. Just last two questions. One is, before this interaction started, we were talking about how it is important to also dissect what's happening to individual economies. Now, we've spoken about India. What about some of the other economies in the region? Anything noticeable or very notable in terms of the fund flow patterns over the last 6 months into any of the other EM or Asian economies?
Well, obviously, Taiwan dedicated funds catch the eye. As you know, to China, it's a renegade province. China has been pretty threatening. And circling back to your question about geopolitics, that's a market you might think was starting to make investors nervous, but their semiconductor story is so strong at the moment. The money has just been pouring in. The other economies that have some noteworthy strength, Mexico, though the flows haven't been quite as reliable as they have towards India. Certainly the sort of story around Mexico and its ability to capitalize on the reshoring of U.S. industry is getting a lot of attention. And we are starting to see, in a sort of herky-jerky way, the flows reallocate in Mexico's direction. And in the EMEA universe, which really is under the cosh, because both of the major geopolitical events at the moment are sort of centered in that universe, Poland is emerging as a market that people do want to take more exposure to.
That's interesting. Just and the reason why it's interesting is because the narrative, and I know you rely a lot more on data than opinion per se, but the narrative in the last 6 months or 9 months was that because of the reshoring, because of China plus one, etc., select markets, India, Mexico, some of the others, will keep on getting flows, independent of what's happening. We're not quite seeing that happen. I mean, they're following the normal pattern that they otherwise would.
Well, no, we're seeing it. There's definitely been a moderation, but as I said, dedicated India funds are taking in money while the broader macro funds are not. So investors are certainly kind of willing to back the narrative you just outlined, even when they're a bit uneasy about the emerging markets as a whole. So actually, no, I think that because there is this focus on individual markets at the moment, a number of them, and India is certainly in that group, are going to fare better than the sort of general group as a whole. How much better? In May, if things get really awkward, be some of the others. But India continues to sort of stand out, and has really since sort of the end of the first quarter of this year.
As we wrap, you spoke about gold. People are talking about how crypto has made a bit of a comeback too. I don't know if there are funds that you might be tracking dedicated to that, but any thoughts there before we wrap up?
You're right. It has made a bit of a comeback. In such a heavily indebted world, and with monetary policy so obviously geared towards generating inflation, the kind of original sort of argument for crypto, which is that it was outside the manipulations of the policymakers, has come back into favor. The fact that BlackRock is planning to launch a major ETF has also given it a shot in the arm. So we saw a significant jump in flows last week into crypto funds as well.
Got it. Yeah. Cameron, such a pleasure talking to you. Thank you for giving us insight into flows across.
Good. Take care.
Thank you. You too. And viewers, thanks for tuning in.